I got Jenny Horne with me here to talk some Nvidia, talk some Snowflake and tech. So how are we looking right now, Jenny?
So we're looking pretty good. I know that we weren't necessarily as optimistic after hours yesterday with Nvidia shares, but there was definitely things to like. There was also things to, I think, give some pause. Okay. So I don't think it was exactly the exuberant response I was calling for yesterday, but I was a little bit maybe too optimistic. Earnings release, though, we saw that gross margin, profit margins actually rose to around 70.6%, or excuse me, rose from around 17.6%. 71% was what was expected for their Blackwell chip. That was, I think, one of the concerns. But if you look at the rest of their figures, I mean, $39 billion roughly in revenue, that was about a 78% growth. Profit rose around 71%. I mean, these are huge numbers for a $3.2 trillion company. This is not any small shop at this point anymore. So consensus was calling for both of those figures to come in lower. I think a clean beat across the board is huge. Data center, though, which is also critical, obviously, brought in around $35 billion in sales, $35.5 billion roughly, smashing forecasts at around $33.5 billion. So the company did say it expects revenue now for their spring quarter to come in around $43 billion, give or take roughly 2%. And there's your weakest spot. That, compared to estimates of around $42.7 billion, was, I think, at the midpoint, I mean, disappointing objectively, but also I think that when you have guidance that's showing a continued deceleration in your pace of growth, that's what the street tends to punish. We saw the same thing happen with Apple, where they were still posting healthy numbers. I mean, albeit not 70% plus, but pace of growth starting to slow. Yeah. This was also the weakest top and bottom line growth for Nvidia since the quarter that ran through April of 2023. Still extremely robust expansion, but right now seeing a slowing pace of growth. Nvidia's growth really dwarfs the 4% in revenue and 10% profit expansion that we've seen reported by a name like Apple. So I know that that's Apple's criticism, but I don't think you can make the exact same argument for Nvidia, but I get why we're critical of a deceleration trend.
Sure. That's very fair. It seems what's maybe helping is the fact that on a 9-month chart, you are basically starting. Yesterday we finished the session at a level we first got to in June. Okay, this is the first time we hit 130. So it's basically been going nowhere now for the better part of like 9 months. So maybe there's this. Yes, there is deceleration. Maybe some of the margin numbers are a little bit lighter than what folks on the street perhaps were estimating, but it still is monster growth, and it still is like nothing else out there for its size. And valuation-wise, it's not that expensive. It's like 30 times forward, and the S&P is like 25. So
it's historically actually at one of its cheapest valuations it's been at in years.
Especially if you normalize the growth, then it doesn't look too bad.
It really doesn't, and I think that this also reiterates a broader trend, which is that the DeepSeek narrative, sure. I mean, like you can see it from here. The massive repricing event we saw, lost almost $600 billion in market cap in one single session. I mean, it was a historic day, unfortunately, to the downside for Nvidia, but I still think that this report reiterates that they're still full speed ahead. They're not slowing their paces. They're not redoing any which way. They're building Blackwell. I mean, all the targets for like their major growth metrics do still seem to be intact.
Totally, 100%. So I want to see if they get to $140 today. That's what I think is kind of the magnet on the chart that would at least recover the DeepSeek sell-off. Should we, Snowflake, CRM, do you think any of that stuff matters next to
I think it's encouraging because I think that after you saw a 30% plus pop in Snowflake shares last quarter, to see a pretty decent reaction now in their fourth quarter, I think that is showing not that it was just like a blip. Like I feel like right now you have some of these names like, okay, not to throw salt to a wound here, but like AppLovin, some of these names that were like earnings standouts this quarter that are now
got destroyed yesterday.
Right, or like even like a Palantir, which I know they've had their own like macro issues, but a lot of these names that had like really solid earnings moves have kind of given back a lot of that with some velocity to the downside. Sure. I think encouraging that Snowflake not only put up a huge print last quarter, but they're doing it again this quarter. I mean, fourth quarter right now, results better than expected across the board. Street is loving this name. I've seen nothing but price target raises. So further upside from the sell side here today. And I think that this is encouraging that it's a consistent trend, not just like a one-off blip of an earnings reaction from their last report.
For sure. And a sign that investors still are willing to pay for big growth even if it doesn't have bottom line profit, which is the case for Snowflake. It's kind of one of the last major profitless, super high growth cloud names that we're getting big rallies for on earnings despite profits. So nice. All right, thanks, Jenny. Appreciate it. Good stuff. Nvidia looking pretty good this morning. Snowflake looking a little bit better. We'll see if Nvidia gets that $140 back on the chart from the DeepSeek sell-off. That's kind of the goal.